Good afternoon, all. It's about 5:41 p.m. on Wednesday, the 17th of May. I'm sorry about my delay. As you know, I got to be in Denver for the next few days. My niece's wedding has been scheduled, I don't know, a year ago. And today was a little bit cramped work-wise and different things I do. Plus, I want to do this. I didn't want to skip this. It would be easy to say, oh, I don't have time. We'll do it some other time. But given what's happening in the market, I thought it was important for me to keep my appointment with you. The other problem was that Admiral Kiko has to be at his camp, and they close at 7 p.m. No, I'm sorry. Hold on one second. I can't speak now. I'm sorry. He's one of our investors, so I'll deal with her in a bit. She's interested in our new offering, so and I left her a message earlier while I was on the road. Anyhow, my apologies. Anyhow, long story short, I had to drop him off too because if I do that this time with you guys, there's no way I can get there by 7. So he's there, and his code name over there is Casanova. He's working the ladies. Yeah, he's just something else. Anyhow, the whole 9 pounds of him, 9.5 pounds of him. So only in America, exactly. So having said that, quick housekeeping items. We're continuing our Tiger Shark demo, and I'm pleased to announce that the last module, the alpha version of it came in. We did a couple of small changes, but I want that to be, I don't want to touch it until I get back. So I told him take a look at it one more time, double check everything. And we've now added log files because, as you know, this is a risk management stuff. It becomes very crucial in a very high speed way. In TradeStation, I don't trust the DOM. The DOM, like today, especially during the run up, I'll show you what I mean. During the run up, it would report, but report a little bit late. Like during these bars, it was just not what I want. Okay, by doing what we're doing, we're creating that. As you know, we do the same thing with 504 or when we go around TradeStation. Basically, TradeStation becomes an accounting module. That's it. We execute our own, and the results get posted, and then we inquire about what our positions are, where our stops are, and so forth. That module is finally got here this morning, and I'm hoping that once we get back, I get back on a Monday, or Monday's a jet lag day for me. On Tuesday, we start doing it. We'll lay off the actual live trading. We go into simulator. As these calculations are crucial. We just don't want to make a mistake. And one day won't make a difference. You know, I'm sure I'm going to find a couple of mistakes one day, give it back to them, and work on it, and then we'll retest it. It's been a journey, but I'm very, very pleased. Actually, it's turned out better than I expected. As I told one of the programmers, I said, the mission said we're going to the moon. What are you doing go to Mars right now? He goes, well, I know you. I thought you were going to ask this and that later. I built it in now, which is good. I'm privileged to work with such a smart people. Other than that, our PMT, we gave an instruction for those who were still in. Some people didn't get in. My instruction was not super hard saying, get out now. I said, be ready to get out. If you look at our, let me see what we have here. If you look at our, I want to say this because it's a PMT, market timing. I want to make sure that's recorded as such for everybody's benefit. Let's see. There we go. Here's the order. Okay. Here's a snapshot of the order. Okay. The next day in the afternoon, the 404 on SPX target was not hit, but the SPY was trading at 403, which is 10 to 1. So technically we've gone there, and our spread was worth about 1.21%, 121% higher. So you take the initial money out, what was left was 121%. Well, some people got out. Boom, boom. These guys are killing instincts, got out. Some people didn't. Of course, we gave back, and we could, because of what the SPX did right here, this theta. So this is the day we put it in. Remember, we went short with Time Digest. We waited one day, we put the spread on, and that's where we went next day, and it hit almost hit 50 bar. For that, I went out and said, "Listen, guys, get out, get out. We're still gonna keep our market bias to the downside with Time Digest. We're not closing that. This is, I believe, was Monday morning. Yeah, it was right here in this bar. Get out if you're still there. We're gonna put another one up, but I'm gonna wait for the market to rally first. We may have gotten that today. We'll see. Now, what happened today? And we're going to go through charts and do a recap. But my thinking was VIX expiration today, OX Friday. A lot of people short, and then looked like both sides have decided on the default that they're not going to default. I don't call this a debt ceiling. I call this default, a little more appropriate. They're not going to default, and then come up with a smaller, higher level working group to further negotiate. I still think this is going to go to the wire. Washington is very good at that, and that gives us some volatility. And probably, I don't know what tomorrow, but once I get to Denver, I'll have my laptop with me, probably put another trade on to the downside. Same bias with the Time Digest, but another put spread to squeeze it a little bit more. I don't think we're going to be done that fast. Here's the problem we also have. You need to look at the calendar for both Senate and the House. There's like 4 working days between now and the end of a month. Having Secretary Yellen reminding us again yesterday, the ex-date is June 1st. There's 4 working days left that where both chambers are open between now and then, because this is a time they take time off. So it's not going to be immediate. It's not going to be that fast. I think the two parties are far apart, where it'll give us additional oomph on the VIX side and a little down push here on the market. That's my thinking. If I'm proven wrong, I'm proven wrong. And I don't worry about next trade. My record speaks for itself. The issue is over a long number of trades where you are. And so, I mean, the charts we post, for example, this one, I think there's a chart here somewhere. No, this is might be a day before. Here's one of our charts. There you go. This is about 170 trades over 7 years. And this is what we bit S&P by. About that much, 121. If we divide by 7, you could see, what is it, 121 divided by 7. So on the average, we beat S&P about 70% compounded each year. Not compounded, I'm saying, average. But 70% each year we have beaten over a long period of time. That's what I shoot for. And remember, this is cash on cash. This is not options. Options add additional liquid fuel to the rocket. This is just cash on cash. So, and remember, this one does not get plotted if we're flat. This is measures how we have done at Time Digest. Okay, we did that, as I've said before, to give clarity for ourselves and also make sure they have not made a mistake. Over this period, I believe it was somewhere in here, we found one mistake that missed one of our signals. They looked at our emails, sure enough it was there. I showed them, here's the email. Look at the timestamp. You should have got it, and they did. And the problem was that we went from long to long, impossible. You go from long to short or long to flat. You can't go from long to long. Yeah. But, they're doing 120, 125, 130 market timers. And they have to anchor every time we make an opinion, whether long or short or flat. Each time we do that, they have to anchor as of that point versus what S&P does. So I want to make sure we understand. This is not all of S&P. There have been times we've been flat. Why? We don't have a quota. I'll never work under quota. We are event driven. Just like trading. There are times I just sit there. I'm event driven. That's what I've learned to do, to be, and as you grow and learn and get more mature, hi Anita, how are you? Hi Anand, how are you? You become more and more patient. Yeah, get patient, and you're not looking to be a cowboy. You're actually looking for, does it make sense, and what's my behind? How do I protect my back? Because if you protect your back, the winners come. The problem is not winners. The problem is that you're not careful with what goes against you and blows up, and that's what the problem is. That includes me too. I know that's one of my shortcomings too, just like any other trader. So I'm no different than you guys. I'm just an arbitrator. But you learn from your mistakes. Was the guy in the chat room the other day said he was told early on at CME, he's still a member, when he had come in, one of the guys standing next to him is S&P pit that said, uh, love your losers, hate your winners. I thought that was interesting. I had heard love your losers, but never heard hate your winners. So anyhow, I try to be numb. Not get emotional. Sometimes I do, I just can't help it. I'm a human being too. But especially like in the afternoon. So I've learned not to trade during the afternoon. Between like 11:30 Europe close, start wrapping up, be out by noon. Don't touch it until 2:30, and then come in at 2:30 and just be a chump. Just sit there because you gotta wait for the event. If the event isn't there, don't jump. So, anyhow, so that's on PMT. So we'll expect now. We'll change the order number. That's 371 is done. This will be 372. The bias is the same. We have not gone over our bias for Time to Digest. By the way, Time to Digest itself has a comp account to PMT, so they see also what we send you as the additional filter or additional rerouting of the email. So they get a second copy that says, hey, this was done. Anyhow, and then we get their copy. Once they get their copy, we update our Excel sheets. Because if they don't receive it, they don't register it, it doesn't matter. We're not in a position. We're going to be in position by them. I don't make the rules, they do. Okay. Remember, it's father and son. I think father is, he still is around, but he's up there in age. And they've been at it 40 years, and they're totally uninterested third party. And again, over all these years, since 2003, which is 20 years now, I found them to make one mistake. One, at least with me. One email that was bad, yeah. And the other thing is that I don't give up. When I'm in a bad situation, I'll be patient. I'll try to work it. There'll be a lot of times for people who really, really, really missed it. There was a perma bear, good friend of mine, lived down here actually. He kept on shorting the market in 2018, 2019. 2018 he made a few bucks. 2019 he got blown out. But he left. He got upset. He left. But he told me personally here because he lives in Naples or maybe Bonita, north of us. Faye, I'm gonna still stay short. I'm just pissed off at how this thing works. I said, okay, fine. Then came 2020, and nobody saw him on the list because he had quit. So don't give up. Up and down is part of the business. You just have to have figure out how to minimize your losses and let your winners run. Okay. Always use the stops. We're in a high intraday volatility environment. Please use your stop. As a matter of fact, the reason I push for this risk management module to be built to my spec, being a practitioner, not just accepting the software as a download and use. No, because as you know, we improved also their option pro station. While I was in Chicago, I think last 3 years of my work in Chicago, a lot had to do with helping TradeStation get a decent not professional, but institutional grade option station going. Now this part of the future side, I'm using what I do by hand or by quick calculations or maybe Excel into a module of theirs. So it's all interconnected. I don't have to punch in what my entries were. And also we're creating a log file that records where our actual trades were. And we're going to find out next week using a simulator first. Why are we doing that? Again, the trade manager they have is wonderful, but it's not 100%. And where I come from on the F18 and B2 project, failure was not an option. You could not guess where we are, for example, or what's the tailwind and at what level we're dropping the nukes and all that. So not a joke what we were doing. I had to work. So I need near perfection, and with these two guys, I think I'll be there sometime next week. But I'll be realistic. I think probably going to take us a couple of weeks to do the testing because you got to go through different architecture and speed. Again, option expiration week. You have known. I know some of you who are in the option with me. You know, I've repeated that said, look for change of bias on Wednesday. Why? We probably had a lot of shorts here. There were a lot of puts. They had to go away. They were done. Their clocks were clean. Chicago style. Yeah, that was on Wednesday. Of course, it was a VIX expiration. This morning, we've already rolled as of last week or mid last week intraday in the room, I was coding some values on the spread. I noticed that I should roll it. It's about to. We rolled it. I think it was last Friday. Yeah. To long June, short September. Regular OX is on Friday. You got these characters coming back. Why? This was past FOMC meeting. They had quiet period. Jobless claims are going to be important. I would watch for Philadelphia Fed tomorrow. Because you saw what happened with Empire State Manufacturing was horrible. So this is the North Atlantic. This is Mid Atlantic data we have to take a look at. One of my favorites also is leading indicators, and I don't believe it's a little black dot. This is more, to me, it's more important than other reports, of course. And don't forget existing home sales. Let's see what they're expecting. 4.4 for a little bit of downtick. We'll see. Okay, we'll get into also treasuries. So a little bit of downtick. 4.3 they're expecting versus 4.4. We'll see. And kind of right mid of the range of the consensus. Okay. What else do we have for this week? Yeah, Williams is head of Chicago, New York Fed, probably the most important player in the bond operations of the Fed. So that's at 8:45. 11, you got Jerry speaking. Okay, Jerry Powell, honorable Jerry Powell. Okay, let's see. So let's go to charts. So far, so good. Any questions? Big day today, no question. And what was the high? 113. No, I'm saying 164. So it closed eight handles from the top. Yeah, I'm just looking at the charts right now in our main chat room. Yeah, I could see the pullback came, especially we really closed within the congested area of, especially on NQ, of the Excel Plus block sizes. So the big players were involved, no question. But we got to 22 on CI on that. So I expect a pullback. A little bit of pullback is in order. Could be tonight, could be one of the numbers tomorrow. Okay. I would suggest also you not trade Friday afternoon. Option expiration Fridays afternoons are very difficult. It's called pinning. I learned that in Chicago at SIBO. These market makers come in and they look at their OI. There's a number they need for name. Let's say Apple. And you don't need big ones. Just Apple. The 7, 8 names in the NDX by market cap controls it. Apple, Amazon, the FANG plus Tesla and Microsoft. You're done. With that, because those are pinned according to certain OI they're looking for, the movement, the machine buys a few pennies up above. I'm sorry, sells a few pennies above that strike, then buys a few pennies, maybe a nickel below, so that it gets mean reversion going into the afternoon. What happens to the index? Will impact the index. You control 7 to, let's say, 10 of NASDAQ 100, you're controlling the index itself. So don't trade in the afternoon. You're going to only make your broker happy. And in case of trade session or interactive, they're rich enough. They don't need any help from you or I. So go do something different. Yeah. And then first hour of Monday, you have the unwind. You have an unwind of expiration. So I wouldn't touch it either. Let's see what happens in the second hour of Monday. Okay. Now let's go to a detail of the chart here. Let's see. Wait, 1 sec. It is hot outside, really hot. It was 94 at parts of the city here. Right. Big bar on SPX. We hit 1 sigma. We have another sigma to go. Now remember, there's a good chance on the Wednesdays where this happens on the option, which is to reverse the prevailing trade. We've always been negative. They get caught. Now a lot of calls have come in. Don't forget, people are trend following. A lot of them are, or their brains are in their eyes, as my dad would say. their brains and their eyes. They look at this, I gotta get along, I gotta get along. And for the short term ones, I bet you there are a lot of new initiations of long calls here, or including call spreads. No, it doesn't matter. Now these guys for May expiry, guess what? These guys go worthless. That's how the floor makes money, and the floor is the house. They have to make money, otherwise they won't be around to service you. Just no different than a house in Vegas. So I expect another move down. Now the issue is what's the catalyst? How do they do that? How do they pull the rabbit out of a hat twice this week? You'll see. Marcus, Wall Street is very good at that. So I expect a pull down, but that's typical. I may put a trade on Friday, most likely. I'll leave it for Monday around noonish, okay, for our next trade on this bias. I think we're going to have higher volatility. Look, already the volatility has dropped dramatically. And as you know, volatility cycles are better predictable than price cycles. So we should see a move to the downside. I wouldn't mind for this to go up another bar tomorrow. We know Friday is going to be very, very flattish, notwithstanding like a macro news, okay? And then we're ready. If we go to 2, I'm ready. I'm ready to sell the sucker. We have put spreads onto a downside, okay? That's what I'm thinking. Well, here's McClellan oscillators. Remember, these are after the close, so the data is clean. Negative 14 there. Nasdaq has done better. Equivalent of it is 64-ish. You also see it on Breadth Trust, almost 51 versus 49. The CIs have pulled back. CI dips have been meandering. Today we went 0. We have had positive CIs for Nasdaq again. 7 to 10 names are controlling the whole index, and you have that bifurcation between the industrial economy and high-tech economy. So that's normal. That's where they're hiding it. Why? Earning power. They're still showing earning power. So, and better products, new products, AI stuff, all that jazz. So you'll see the big boys hanging out in this area. Yesterday, it was the push down, but the volume wasn't that bad. It's only 5. So on the downside, we'll look at volume again. Let's go to the canaries in the coal mine. Okay. Finally, Transocean came back. It's still below the death cross. You see the death cross forming? Here's your 200-day. Here's your 50. That's a death cross. So if it stalls here, yeah, we got to be visiting the lower end of the sigma levels. I would be expecting it to go to test this low. Okay. And also same story, but except on the Russell. Remember, this is the borrowing intensive environment. They don't have the equity of the, I'm sorry, Nasdaq. That's not Nasdaq. That's utility. But the small caps being hindered. They're already in the dead cross mode, and now it popped up a little bit. We'll see. As far as the Fed is concerned, I am not sold that we're in a pause mode yet. Data is okay on inflation is slowly coming down, but we're going to be in this regime of relatively high interest rates, and you have to debate that whether the real interest rates are high or not. And remember, I'm not a bond guy. I know a few of you are much better in that than I am. I don't think I don't see any easing by the Fed, but most likely could be staying at this level or just nominally having a quarter point going. They really need to get about 2.5% higher between in real rates for this to come down, maybe 3% higher, at least for a short period of time. The problem is that nobody's got a political will. We'll see. Where's Walker when you need him? Yeah. Great guy. Okay, D-Trenders. Obviously, we broke out today. Nice rally in that highly congested area that we've had for several days. Chart looks much better for NDX. I think this is led by Alphabet and Microsoft, and maybe Amazon. Of course, Meta has come back from the death. Where you could barely breathe. Now Meta has come back, and Is there anything else that I'm missing there? And Tesla, of course. Tesla has been good too. Tesla had a good reaction today, even though Elon just went a little bit nutty on that interview. But you know what? They want him like that. Trust me. Yeah. Okay. This is SP1 Momo chart. Again, two mechanical systems are running unaltered. We've had these for years. It's just I don't trade with it, but I use it as a feedback. What does the mechanical system would be doing? Weekly is on a buy. The daily is also on a buy. Now, it was on a sell and immediately rotated. The problem with this part is that at times this could be counter trend. It happens when it gets really stretched. It goes to a buy, and that's the end of a move. But that's what trend following does. So, what's more important to me are internals. I've always valued internals way over price action. And SPX, as you all know, has the most internals of any index, any. Through various things, tick, trend, advanced decline, up volume, down volume, VIX, the list goes on. So this is to me a bigger picture. We are getting a lowering here of SP1, not complying with this, so we begin to build a divergence. Of course, we were a little bit on the low side yesterday at the closing near -5, halfway through into a buy zone from a neutral zone. It pulled up to -2, almost -1.8. That's where we are now. We had a little bit higher 52 weeks high today than last couple of weeks. But if you step back, look at it on the weekly chart of 52 weeks, there's nothing, no signal. Usually when this peaks, downfall is coming. When these peaks, we're going to go rally up. So both of these are not in a signal mode. So no signal here. When this gets to -10, then I'll think about getting long. But right now, I'm talking about swing trade, several days. Right now, I think we're still in that soft area where leaves us a chance to turn around and go south. We'll see. We'll see if that prediction is correct or not. VIX, very low area for a while. As a matter of fact, if we do it like this, which I like to look at weekly chart of this, so we can get the shock waves. You can see the shock waves based on the levels of VIX arranged by weekly bars and then superimposed by sigma channels, which gives us the points that we know this is like must be late March, early April of 2020, and you could see when it could not keep up anymore and pulled back. That was the story. We did the same thing here in early part of March. By the way, Orb did very well in March. Remember, Orb wants volatility, obviously. So it did very well in March. Now we've been meandering here. Let me go back to daily. You can do these, by the way, with these little codes that you see like blue. That makes sure we're in the same time frame. Different assets, but the same time frame. So let's go back to daily. Okay. I think we could see 15, but that's it. Normally, we don't go past the second sigma, -2 sigma. You see it here, and immediately it rotates back the next day. We could see 15, but I think we've come down quite a bit. Again, our volatility cycles are starting to play. We should be seeing it move up. I'm not bull or bear. I'm just numb. I'm comfortably numb. Because once you start having thinking that I should gotta be long or I gotta be short or going into hell and this and that, you're forgetting the chart. Let the chart tell you what to do. Okay, SQ came in. We were slightly elevated. So over the last few weeks, slowly the big boys are exploring some out of the money SPX puts outright typically, or maybe some spreads, but way down here. If you look at these areas, I'd say where they may be thinking of is between 3,600 and 3,400 on SPX, the cash. Okay. But we need this to go a little bit higher. I need this to go a little bit higher, and then that's the spike where we got to be careful. Right now, we are still below median. Median has been 140. Look at the actual high and actual low observed. Empirically, it's not 125 because it was designed for. I've dealt with these characters over at SIBO. Was this as this was coming out? Actually, was one of those episodes designed for 100 on the low side. We never got this 110 and 150 on the high side. We've gone way past that. So whatever is the phenomenal, we have shifted up. Median is about 140. We're still below that. So no signal yet, was worth viewing it. Especially remember, this comes up one time after the close. Treasuries. Here they YTM, yield to maturities. Hello, hello, hello. This is totally counterintuitive. Market rise this high and the bonds are rising. I'm sorry, bond values are dropping and interest rates are rising. That still tells me, and remember, the smartest guys in the room are always bond traders. Tells me that they think Fed is not ready to ease. I even question whether they're going to pause or not. So if it's up to their own senses, probably give us another quarter point. I don't think they're going to touch anything until maybe we get into fall. But I could be wrong. I'm not a Fed watcher, but I read. TD. I'm sorry. Also, look where we are, though. Near pivot, slightly above pivot. More than halfway between pivot and resistance 1, and then 30 above resistance 1. So it has moved. And of course, this had a big day. Which is the IRX. That's 91-day discount rate, not yield to maturity. Okay. Again, you got to do it 4 times compounded because you got 4 91 days in a year. Okay, this is for keeping an eye on what place time of digest is up to. Okay, we hit negative 204. These are 30 minutes. Okay, earlier in the day, we were around, let's see where we're at. Hold on, what's the value there? 332 negative. Okay, again, double checking. Here's your value. Here's your inputs. Here's your spread. June, long June, short September. We have been coming down. The market has slightly been rising. We got near zero. Remember, it's the inverse scale where we were getting these lows, confirming that. Once this turns, you know what's going to happen. It's written. Why? There's so much activity here. I mean, right now it's open, very few. You don't see what happened during the day, but earlier in the day, you had pretty decent volume in these. So, all right, let's go to SP2. Now, by the way, I gotta share this with you guys. I talked to her in the chat room today, like a month ago, maybe 2 months ago, I think it was. I get an email, one of these webinars, hot to trot. I gotta sign up for PMT. I need PMT. What a wonderful thing. I've been following you. I gotta do this. Okay, fine. How do where do I sign up? I send him a link. It's like $70 a month. It's nothing. He comes back. He says, no, I want the chart version. I said, what do you mean the chart version? We post some charts, we go over these, we email out, we post. We don't have charts for PMT that we give out. No, I don't want all of it, but just give me the SP2 and Momo. I'm willing to sign up to get Momo and SP2 in front of me. You know what I did? And that's what I prefer. That's how I'm going to sign up. You know what I did? I just delete the email. Don't tell me what you want. This is what we're going to treat everybody the same. These are not items that we send out. And it's locked actually into my this login. So it doesn't run on other things. And so on and so forth. What's inside of it doesn't matter. Forget what's inside. Look what it's doing. Learn your lessons of how it acts. Look at let's see. Look at this. You see that drop? Yeah. We peaked there, divergence, and we went sideways and dropped. Look at these bottoms versus here. Here's one of them right there. Look at that first bottom. Here's your second bottom. And then look at the divergence. That's the second one I'm saying. Look at this divergence right there. Lower price, higher value. And that's all she wrote. And Sigma level is also confirming that too. Look at the shape of what Sigma, where these plot points are versus its Sigma level. So if you learn to read the Sigma levels, which is a superset of Bollinger Bands, the superset, you learn how this thing works and what to anticipate. And if you can anticipate these kind of moves like on SPY, you're golden. You're golden. But we're not giving this out to anybody. We have it open. We have it open on every Wednesday. And look, I had a lot of items I got to take care of. I have more stuff after this, but I didn't skip the webinar. I said I'll do my best to have it. So, anyhow, so what we do is vanilla. What's on the website is available. We don't do preferential treatment for this or that. So that fellow, I just delete his email. So I'm not used to being told what to do. Okay, I work very hard to be fair to everybody and offer what's reasonable, not too expensive and not too cheap, but and our track record speaks for itself. But please don't come in and tell me that you won't be empty this way. That's the answer you're gonna get, which is no answer. Yeah. Okay, let's go over here. This is not my work, is Larry's research. Work was conducted by Paul Desmond. If you go to our Twitter feed, let's see, you'll see we posted. Actually, I don't. My dog posts them, Admiral Tico. He posts these. Do you see that right there? And usually at one time during the day and then one after the close. Most importantly is to read this link. This is the work by Paul Desmond, great guy. He passed away recently. But it's identifying bear market bottoms and new markets. So, and of course, I follow there what Walter Deemer does. You can see his name there. Walter Deemer is a pretty sharp cookie. And of course, there we go. That's Walter right there. Boom, right there. And of course, he also explained that I do more charts and all that. The most on this subject, so he's happy. And so on and so forth. Very smart guy. Read his book. If you get a chance, read his book. I just recently downloaded the Kindle version of it. It says the time to get into the market is when you look at the market and you don't want to get in. Yeah. Okay, we did 81% today. So we went over 80, but never crossed 90. I believe you won 2 80s in a row. 8 or 90, these are percentages. And they're follow through day as defined by Investor Business Daily. So another guy you want to watch, who is a buddy of mine, lives down here, Norseman. He's one of the best clinical practitioners of this Lowry report, up and down volume ratio. And I find this more useful than what I had before for years. But I still keep on looking at both. So here it is, and we post this once or twice a day. I'm going to post one after the close here because today I run out of time. Buying Power Index. This is still not my work, Peter Cook. Oh, one more comment. I've talked to Marshall. Marshall is just hammered. So it actually ran through the dates and expired. We have the names. We got to keep the names. Instead, he was going to do a talk on the S&P 500 trading. Not a system. He's not a system guy. He hasn't written one-line code in his life, but he's a great trader. And he's very patient. And the secret is this: big account. He's got a huge account. Okay, I mean, if he would say, "Fai, could you trade for me?" He would immediately qualify for Tiger Shark. He's got a huge account, but he trades very small, and he doesn't trade every day either. He looks for event-driven. Unfortunately, we're not going to have that webinar. Instead, here's the good news. Peter Cook, I've convinced him, the guy who wrote this code, and also is our chief moderator in our chat room, to give us a webinar, and he's accepted. We just have to figure out the dates. Realistically, here's what I would suggest. I can't do it next week. Okay, that's mission impossible. But we could be doing it on the 30th. 31st would be another PMT webinar. So we could do it on 30th of Tuesday. So for now, keep Tuesday, May 30th open on your calendar. Okay, 29th is should be Memorial Day. Keep 30th open, or maybe we do it Thursday, June 1st. Okay, yeah, right on the default day. Yeah, we'll see. Very smart guy, extremely well read. I've met him. We had dinner in Tampa one night. We had gone there to watch Blue Angels. Yeah, at what do you call it? At MacDill Air Force Base, CENTCOM. So very interesting fellow. He went to GIT, Georgia Institute of Technology. I forget what was his specialty, but all engineering, of course. Yeah, very good with numbers, and he came up with this, which takes the other system, the other concept they had, Larry had, which is called buying power index. He doesn't use the short side, but he does use the long, and he's been a bull since this signal in the chat room when it shows. Just has been incredible. Yeah, we're gonna have Peter Cookin. He's also good with Gamma Strike. He knows the intraday like nobody of what things to look for. Of course, I've trained him on OTF, and he's been using OTF quite a bit. About 5-6 years. So that's why at one point I asked him. I said, "Listen, Peter, why don't you come and help me on the moderation side, especially when I take a time off, like at noon or something, to catch up with other things or take care of Tico or whatever." And he's been a blessing. He does not work during baseball season, the spring training. Yeah, he's involved with Blue Jays. So down the street from him, and he's got something going there. He and his wife. Anyhow, great guy. You're gonna see him. We'll shoot that week, if not the following week. That's my promise. I just have to confirm it with him. But either 30th of June, May, or 1st of June. Okay. We do not do webinars on Mondays and Fridays. First of all, this is closed, but also Mondays you're still in the weekend, and Fridays you're too tired. That's why we always do our webinars Tuesday through Thursday. Okay, and we'll be the same time, 4:35 after the close. Probably do that 5 because he is active the last hour. Okay. What else I have for you guys? And then we're going to also talk about these nations. That website you want to take a look at. These indicators improve where SIBO left off in volatility stuff. Yeah, very interesting stuff. And there's a PDF with that on the website. We're going to have you go and take a look in advance. So you come in prepared with practical and relevant questions. Okay. Now, let's see. What else do I have here? Oh, I'm done with the charts here. Let me go to. Come fly with me. There we go. Let's see. This chart. Okay. Now, what's our resolution here? What? By the way, I don't see. What do you call it here? I don't see. What is not here? What happened to him? Not Phil. Who's the gentleman here? I forgot. The Italian fellow that is always here. He lives down here too. I forget. I guess he made his millions. I don't know. He's a good guy. My mind is blank. Yeah. Okay. Here's what's going on here. Look at that. Look at that. We talked about. Go back 2-3 webinars and you see what we talked about. This is exactly happening. We talked about, and it broke 45. Guys, I think we're going to break down because this is not something small, and it's not moving back and forth crazy. This is a slow move down. I think you're going to see a downside here. I'm not sure this bad. Well, let's go to 3 years or 5 years. Hold on, let's do it 5 years here. There we go. Yeah, you can see. I'm not sure we're going to be this bad, but we could come in, hang around 25% area, or touch it and test it. We broke under 45, as we discussed. That's the critical part of the signal is above 55 or below 45, and look where we did. And Look at the, what do you call it, the two moving averages. There's a cross there. Yeah. Oh, wow. Any questions for me? Obviously, this will be posted today, right after we're done here. And as always, it will be on YouTube channel and so on and so forth. Okay. Any questions for me? Okay, all. Thank you so much for attending. We'll have another short and sweet session like this next week. When I get back. Yeah, I'm back Sunday late, early evening Sunday, and we'll definitely have one on Wednesday. As always, if you need to jump in and join, here's what you can do: register just once. Remember, this got reset. Why? We started last year. I think they allow you to go 1 year every on a weekly. Once you go past that, I think they reset you. But we have the email list. We have those, and we started fresh, and about 45 people or so forth have recently signed up. Okay. Thank you very much, Greg. See you guys next week. All the best. Again, watch out for Friday expiration. Good night now.